G'day guys, as a new trader, as a beginner, we often find ourselves scratching our heads with very little to no clear idea as to what direction the more highly probable trades could be taken in. I know when I first started, I had absolutely no idea whether or not it was more probable for me to be in a buy or a sell. So what I thought I'd do in today's video is just go over a very simple strategy that you guys can follow to determine structure in order to give you clear direction as to what the more highly probable trade direction could be taken in, whether it be it's the upside or downside. So without further ado guys, if you could, make sure to smash that like button. If you've not yet done so, please don't forget to subscribe for more free educational content. Enjoy the video guys. So now it's time for that lesson in structure guys. Now this is one of those things, the more you do it, the easier it is. It'll get to the point where you can just literally determine a structure within seconds of looking at a chart. Now the same method applies for the 3 different time frames that I actually look to determine structure on, that being the daily, the 4-hour, and the M30. So what we have to do is, guys, what you can do is, and just to make the process a bit quicker, you can sort of eyeball whether you're in an uptrend or a downtrend. And by looking at that, what I would then tend to do is I identify the highest point the market got to. So we can see GJ just here is obviously in a uptrend. So I'd mark in that as the highest point that the market got to. I then look to the left of that. So before you bother about looking to the right, once you've determined the high in this case, because we can clearly see we're in an uptrend, I'll show you what it looks like in a downtrend shortly. We are to look to the left of that to determine, and we ask ourselves, where was the last two or more consecutive candle pullback in the opposite direction? It has to be 2 candles, not 1. As we can see here, got a pause just there. 1 candle closing back bearish. Prior to that, we had a bullish candle. Prior to that, we had a bearish candle. See how it's not consecutive? We've got in between, we've got a bullish candle. So we've had a pause in between. There's no 2 or more consecutive candle pullback in basically this whole move up. So therefore, it's just the 1 impulse. You can consider that to be the 1 impulse. If we are to look further to the left, what we can see is the origin of the swing is just here. We've got 2 candles consecutively. It can be more as well, 2 or more, pulling back in the opposite direction to the trend. Therefore, that is our origin. And what we can say, and this is really easy guys, anything between this low and this high, we technically will be bullish. Doesn't matter if the market pulls back, creates a lower high, lower low, lower high, lower low, lower high. It's irrelevant. It's relevant until we actually start to close below the lowest point, the origin of the swing to the upside. Now it has to close below, can't just wick below. It has to actually close below to confirm we have flipped the structure. Now that is the most simple way to determine structure. Now if we are to move forward, and let's just say we have, let me just delete this quickly. So we again approach these highs and we create a higher high. So we have a closure above that level, like so. And that would be green, that would be bullish. There we go. So now we have identified we have a higher high. That is, for instance, the highest point. So we will then shift this horizontal across. And what we will then do again is look to the left-hand side of this origin, this swing to the upside, not the origin, the swing to the upside, this impulse up, which created the higher high. Now, if I'm to look to the left of that, again, I'm asking myself, where was the last 2 more consecutive candle pullback in the opposite direction? Let's just say from this point here on the live charts, guys, we start to do this. Therefore, my last 2 or more consecutive candle pullback in the opposite direction is obviously, we've got 2 candles here, but you have to incorporate the lowest point of that swing. Even if it's a bullish candle, prior to price pulling back up, you just use that whole entire swing point as the level where price will then need to close below in order to flip the structure back bearish. Now, let's just say we pull back a little bit. So just try to speed this up a little bit. Let's just say that's going to be bearish. We start to make a bit of a pullback, guys, like so. Bear with me. And then we again begin to flip back bullish. And now what we then have is another candle closing up near a high, but it doesn't quite close above it, and it may wick above it. We do not then shift our highest point to this point here. Reason being, again, until we get a closure above, this is the origin. Prior to prior to the swing, we had another swing just here. But this swing is still irrelevant until we actually close above and create a higher high. And if we were to create a higher high, like so, then we would therefore shift our last significant high low to the most recent swing point, which would be here. And only then, once we start to do this, when we come back down and actually close below, and we say we'll flip the structure back bearish, and that case, we will then shift our change to look to the left to determine our last significant lower high, which would then be this point here, the highest point of that swing. Again, it doesn't have to be the bearish candle, just has to be the highest point of that swing. Could be a bullish candle, that's fine. And we have to look to the left of that, and we then say to ourselves, until we close back above that origin of the swing to the downside, which flip structure bearish, we will remain bearish. So that is just a quick lesson in determining structure to the upside. On the next video, I'll show you how to look at it in the opposite direction to the downside. Cheers, guys.